Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. I read in the comment section that some people were commenting about Cathie Wood and what she wrote. Um, they wanted me to comment on it, and you know what? I'll do a video on it and comment on it. Why not? So that's uh, okay. Uh, all right. I'm trying to gather myself. All right. There's a couple of things I'm reading here, and I don't know what to say about it. It's crazy. So here we go. It says Cathie Wood says her biggest concern for markets is a deflationary boom. A deflationary boom. So she thinks that deflation comes from technology. And what there's a couple of things here, all right? So inflation is a monetary phenomenon. It doesn't comes from technology. Now, some prices can go down from technological advancements. Yes. But if you throw more money into a system, prices have to go up of something. So you can have inflation in the system and have other sectors go down during that same time frame. So you can blow up bubbles. You can have stocks go up or inflate higher. I should say they go up. They don't inflate. Inflation comes into the system, and then it gets directed to certain areas. You don't have. If there's more money in the system, something has to go up. Period. Doesn't matter what it is. The money can go to stocks. It can go to bonds. It can go to precious metals. It can go into crypto. It can go somewhere. I don't know where. It's got to go somewhere. That is inflation or deflation. You can have prices go down from technological advancements, but it's not a deflationary boom from a monetarist standpoint. That's just prices going down. So I am not positioned for this deflationary boom because I think we have inflation, monetary inflation, which is going to increase the prices of everything. And that increased inflation is going to put pressure on interest rates to go up. That's my take on it. Now, where people were getting a pretty crazy on is, this is the quote here. It says, according to the EIA, global oil demand peaked at 101 million barrels per day in 2019, dropped to 92 million barrels per day during the coronavirus crisis in 2020, and has rebounded to 97 million barrels in 2021. Based on our forecast for EV sales, ARK Invest believes that oil demand has peaked. And then Kiwi Bubble writes, what a terrible call. Oil is nearly $70 and likely heading above 100. Supply shortage and demand is soaring. This rivals only at Jose whatever is for missing out on one of the best trades in North America. Canadian energy names up 400 to 600% since this call. Well, on the channel, everyone's known I'm a massive bull, and I actually have some videos counteracting Cathie Wood's opinions. Now, she can have her opinion, and obviously I can have my opinion, and not everyone's going to be right all the time. But I'm going to pull something up here that I got. I received this from another member on the channel. His name is Josh, and he sent me this, and he's learning technical analysis. And from the channel that we have here, he's learned to recognize patterns that repeat. I talk a lot about repeating patterns, about herd mentality, and about the patterns repeating over time. So if a pattern repeats, what we should be looking for is that pattern repeating again. And what he did is he looked at oil, and I've done this as well, and I get the same results as Josh does. And he charted it out. So here's the chart here. I think he did a very good job of charting it. And what you basically have are these consolidation periods in the triangles here, 2 consolidation periods. We broke out of that triangle consolidation period and created, and remember, you can arbitrarily call whatever you want these points. you had this uptrend, downtrend, so 0.1 to 0.2 to 0.3. We broke out this way, 0.1 to 0.2 to 0.3, which is on this side is just amplified because we had the COVID sell-off right here. It's amplified lower. And we've been heading on up just like we have here. Now, you can see that this, and it's not going to be perfect, guys. It doesn't mean that these two patterns are going to match perfectly. It's about getting the patterns generally right. And what I think he has here is that it's generally right and that we are somewhere in this upper move. And I agree with that. You can see one leg, two leg, and we could, obviously at any time, we could kind of peter out a little bit and have a little bit of a pullback. And it may not be as big as this pullback. It may be shallower or bigger or whatever. But where we are in this pattern is somewhere in this range in here. And I think we're probably going to come up to $90, $100. We're probably going to come back down a little bit, just like this pattern suggests, and then really ramp up. So what this is, and there's an Elliott wave, you get a first wave, a third wave, and then a fifth wave. And then you have this consolidation period, and then it drops back down. We are putting in the first wave, I think, and then we'll eventually peter out a little bit, pull back a little bit like this, and then create a massive third wave. What this chart is saying, and this is just herd mentality amongst market participants, is that if this first wave gets to like $100, that means that this portion here is about, just underneath the 140. So it could go to 100, 110. We pull back a little bit here, and then we make a massive move on higher. Now, this move went from maybe $40 to about, it put on about $100. So I think that this top is probably going to be, just looking at this chart, if I were to put an estimate, I would say somewhere around $280 to $300. Because if you look at this, it went from 40 to 140. $100 over 40 is about 2.5 times. And if the peak here is 140, I mean, it could go even higher. 2.5 times 140 is a large amount. That's, you're going to be, well, 140 times 2, let's just say it's 300-ish or 280, plus another half. So let's do 70. Yeah, about 300. What, 350? About $350 a barrel. It could potentially be 350, 300-ish. That's kind of what my guess would be, $300 to $350 a barrel when looking at this chart. If it were to do something similar, like first leg, third leg, and a fifth leg, or sorry, yeah, first, third, and fifth. We're putting in the first. We'll do the third at some point, and then we're going to do the fifth. And I'm guessing low 300s. That's kind of my guess. But good job, Josh, for knocking out this chart. Excellent work. Continue to do this type of analysis. Everyone on the channel, try your best to do whatever you can. Try to look for patterns. Look for things that repeat. Look for the ratios and the valuations. Tie it all together. And if you can tie it all together, what you do is you gain the confidence yourself, and you're saying, this is going to go way higher. This is going to be huge. And you can see it and you believe it. You don't have to listen to people like Cathie Wood tell you that we're peaking in oil and that we're going to have some huge crash, some sort of deflationary boom happen right in front of us when we know that we're in an expansion phase of real estate, which is inflationary, and inflationary environments put pressure on interest rates to go up, and interest rates going up, it's going to put pressure on a stock market to go down, especially technology companies that she likes to be in. So it says here, ARK ETF sees highest quarterly outflow on record. And guys, in order to be really good, you're going to have to transfer across sectors. You can't be in one sector. You can't be technology only, and then be blinded by everything else. That's my opinion. I purposely named this channel Finding Value, not a commodity channel, not gold and silver, not anything in particular, not any one sector, because I didn't want to put myself in one sector. I wanted to be someone that, one, finds value wherever it's at. And that's kind of how I came up with the channel's name. So I think some of her ETFs, the way that she's named them, has basically cornered her into an area that she's kind of stuck in. And if the market conditions aren't ripe for that sector, you're going to get pummeled. So I think we're coming into a commodity boom. Obviously, if you've been on the channel, you know that. I'm heavily oil, heavily uranium, heavily in precious metals and base metals and stuff like that. And the reason I'm there is because the ratios tell me I need to be there. And then the market conditions are also putting and sowing the seeds for how ripe the market conditions are for that to happen. We're still very early in this mix. So it may take some time for all this to play out. It may take 5-10 years. But I think we're going to see a big move higher. And that's where it gets me excited. So I am on her thing, reading a lot of Cathie Wood stuff just to see. It says flagship ARK Innovation ETF likely just recorded its biggest ever quarter of outflows, with about 1.97 billion leaving. The big risk is deflation, not inflation. This is Trader Ferg. I would love to ask Cathie, can you please expand on what you mean by uniquely wrong? I can't help but interpret as implode. Commodity prices. The third source of deflation will come from falling commodity prices that will take place as early as the end of this year. This is from Cathie Wood. Maybe next year, Wood said. It says, we believe that there's a lot of double and triple ordering taking place right now. She said, I think supply chain management systems are getting better, so maybe it won't be as bad as it has been historically. So it says, if we are wrong, then we will be perhaps uniquely wrong, Wood said. And that's what she said in her thing. And, good job, Trader Ferg, for calling that out. But, and guys, it's hard to get some of this stuff right. I'm not going to be right all the time, and I don't think she is either. Oh, we got to read this too. It says, Cathie Wood sees deflation as the next big risk for investors. It says, I've seen a lot of markets and started in the business during the 70s. I was in college when inflation was raging, so I know what that is. And I truly believe we're not going back there, and that anyone planning for it is probably going to be making some mistakes. I mean, she put herself out there on this limb. What in the 70s, what happened was the baby boomers went into an expansion phase of real estate. They had a larger demographic. They bought a whole bunch more new homes, and that was inflationary. That's where my thesis basically originated, was the 70s. And right now we have the millennials, which is a larger cohort of demographic coming into home buying years, buying more homes and having an inventory shortage in real estate, which is going to drive an expansion phase of real estate, more new homes, more new loans, and that loaning is going to be inflationary. We are just starting this expansionary phase. It has time to get worse. Now, what we're running into is inflation from the synthetic printing by the government and the sending of checks out. What comes behind it is that expansionary phase. So this is going to be sustaining for a good long period. And I think that we are going to have inflation, which means higher interest rates, which is going to pummel her technology stocks because PE ratios contract in that type of environment. So that's my opinion. And hopefully they don't make articles on me. Here, I like, there's a lot of good stuff on Twitter. It says the longer a stock base is, the bigger the breakout. And this is completely true here. This is a massive base. Notice that the highs are getting a little bit lower. They're contracting down, and the lows are also staying pretty well put. Notice that you've got big up candlesticks in all these, and then the slow leak off of sellers. This chart looks fantastic. I'm going to click on it. Oh, here it is. And this actually looks really good to move on higher, whatever this is. $ANY is what it is. Looking at this, so much Tesla has Cathie Wood sold since Rob Arnott educated her at Morningstar conference. Meet the day trading hamster that is outperforming Warren Buffett, Cathie Wood, and the S&P 500. Man. So, guys, here we go. The rise in oil prices this year is a function more of supply than demand. At the turn of the 20th century, whale oil faced the same fate and whale oil prices fluctuated dramatically. If ARK Invest's research is correct, oil prices will suffer the same fate as whale oil prices. Now, on some time scale, I'm sure that's probably right, but oil has allowed us to basically to manipulate our entire world. It's such a high energy dense source that we are where we are today because of oil, and we've always gone up the energy return on investment food chain. We went from burning wood to whatever else to eventually oil. And that is what has allowed us to become an advanced society, is that high energy return on energy invested. Now, I don't know if we can do that with solar. Maybe we can, but we go to an electricity world, which we're going to try to do. But obviously, there's a lot of mining. There's a lot of stuff out there. And your energy return on energy invested does go down with those types of technologies where they are at today. I don't know if you could ever get as high of an energy return on energy invested as oil from those technologies, because the energy density in sun isn't as dense, nearly as dense as oil or uranium or any of these other fossil fuel type things. It says crude oil is a different animal than whale oil. Crude is not just used to make fuels for vehicles, education time for many people, and oil is the number one commodity. It's used everywhere. If you've been on the channel, you know I always say that. It's definitely going to 3K. I just hate making money. Cathie Wood dumps the biggest chunk of, well, she has to. Everyone's selling her fund. So either way, I just wanted to go over that stuff. I know you guys wanted me to comment on it. I wanted to comment on some of the stuff that she's writing. But I think oil is going to go a lot higher. I'm in the Eric Nuttall, Nuttall. Check out some of his stuff. I think he's pretty much spot on. And I think we've got a good 3, 4, 5, 6, 7, 8, 9, 10 years in oil where we're going to move a lot higher. I think we're going into an oil super cycle. I think demand is going to outstrip supply. I think supply will go down, and I think demand's going to try to go up, and we're going to get some sort of deficit. How high is it going to go? Yeah, we'll find out. We'll find out how high oil will go. If you guys like this content, give me a thumbs up. Smash that whatever like button thing. And if you guys like listening to the channel, definitely subscribe. Don't know what you're waiting for. Thanks for listening. This is Finding Value.